Red-looking screen when it comes to Asian markets. The Taiwanese index is down around 2%.
The next support below that, a break below that, comes in at 24,444, which is the 61.8% retracement of the rally, 24,818. So that's the first rate coming through.
What we have seen over the course of the last 18 months or so has been that risk has got disproportionately rewarded.
I think the markets need to embrace for some volatility in coming weeks to next couple of months.
Last 30 minutes, markets have picked up and now we're back towards that closer to 24,900.
18 crore shares become eligible for trade. Needs to be clarified here that they'll not be sold immediately.
So there are two techniques for doing tests for monkeypox. One is serological test and another is molecular test.
To levy 18% GST, that is in terms of a clarification.
Not against petrol and diesel or fossil fuel.
Well, there has been a substantial recovery from the lows on the Nifty, 70 points higher.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is a day so far, and it has been a day of slow and steady recovery through the course of the day. I mean, you could say that the recovery is fleeting because it's not being able to build on into a substantial one. But from the day's low, I think this is a pretty decent pullback that we've seen. This is Closing Bell, last hour coming up. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Rima. Rima, hi.
Hi, Prashant. So from the day's low, we've recovered more than 100 points in the Nifty. It's just that in the last 10-15 minutes, we've seen the markets come off a bit because we did cross above 24,900. There you have it, just a little before 2 o'clock. And since then, there has been a little bit of a give up.
You know, it's still possible, right? There's still an hour to go and maybe we'll have a 100-point flourish. But that would be surprising, right? I mean,
from where we started in the global cues.
Yeah, exactly. And so we'll see. So this is a decent day from the day's low and kind of not very much on the upside either. I think broader market, though, are worth looking at as we begin the session. They are still down. I mean, not nearly as much down as they were in the morning. So in the morning, there was almost 3:1 declines to advances ratio. At this point, it's about 2:1. So, you know, 1,800 stocks are lower and about 900 stocks are higher. This is the overall NSE market breadth. Advanced declines to advances. Banks are sort of leading the move. And by the way, the Nifty Bank will come up on your screen. It is above the 20-day moving average. That number is at 50,900. We're at about 50,940 or so. So a little above the 20-day. And I think the close above it will be nice. For the Nifty, it's not really taking out any... I mean, you know, you can look at retracements of the very recent fall and then get to some numbers. But I think that's very, very here and now and very near term. So just give it some more time to give us a bigger kind of a break coming through here, really. I think that bigger number, of course, is that 25,333 level, which is the all-time high. I think that's the bigger one above which you will find more momentum. Otherwise, I mean, it looks very, very ranged. Public sector companies, the CPSE index is down 2% as well. And that is something which we will discuss as we go forward over the next 60 minutes or so. Rima.
Well, Asia has largely recovered from the day's low. It's still ending in the red, given the extent and the magnitude of cuts in the morning. But something like in the Japanese markets, Nikkei is down 0.5%, but at the session's lows, it was down more than 2%. So a significant pullback from the lows for Asia. Europe, by the way, has opened up in the green. So frontline European indices are up close to about 0.5%, and the Dow futures is up nearly 170 points. FMCG and IT, those are the two sectors leading from the front. The Nifty FMCG index is up nearly 2%. The IT index has now come off a bit in the red. CPSE index, which Prashant was talking about, is now down 7.5% this month itself. And from the recent peak, it's lost close to about 10.5%. And individual stocks like a Hutco, BHEL, NFL, these are all stocks which are down 20 to 30% from the highs which they hit not too long back, very recent. So that profit booking in PSUs continues across various sectors. But Mitesh is now with us for a few closing strategy. Mitesh, your thoughts on the day so far, any trends you've observed, and what would the last hour calls be?
Yeah, good afternoon. So the only good trend is that the bank Nifty has bounced back. And I would now want to see two levels, which is 51,100 and then 51,400. I think these two supply points remain important. I think we had a high of 51,100, 51,013. So I think around 51,100, I would expect some strong supply to emerge. But let's see how it goes from there. So if the Bank Nifty fails to get past 51,100, then I think in the next 1 or 2 days, we'll see, some kind of supply pressure again, and the market should again, start coming down. So the view hasn't turned positive, despite the fact that the Bank Nifty is kind of defying the trend. On the stock side, I have one buy and one sell call. UBL is something, which is looking interesting. UBL is a buy. I would give a stop below 2033 here. Look for targets of around 2150. Maybe eventually higher levels, but that's the first target. And Birla Soft or B-Soft is a sell. Keep a stop at about levels of 642. Look for targets of 590.
Okay, thank you very much for that. Dipan Mehta, Director of Elixir Equities, is now with us on the show. Dipan, afternoon. Thanks so much for joining in. Anything interesting that you've done in terms of trades, ideas today or just in the last couple of days?
Yeah, good afternoon, Rima. Thank you for having me on your show. No, I think nothing interesting as such, but just watching the market at this point of time, looking for any opportunities, none of which are coming over at present. But we are seeing that there is at least some marginal correction taking place in a whole host of stocks, although not visible at the index level, but definitely at stock by stock once you go. A lot of stocks are off 15%, 20%, 30% off their highs. Popular ones could be in the defense space, railway space, capital goods. So I think that there are opportunities cropping up. And right now, I think we are trying to look for good ideas in the pharmaceutical space, because I think that is one sector, which can outperform over the next 6 to 12 months. And I feel that valuations are reasonable there, and you could find a few winners over there. And maybe the numbers also will surprise us on the upside.
By the way, just look at Ola Electric. In the morning, it was down 4.5%, and now it's suddenly spiked up nearly 4.5%. Remember, we were highlighting how lock-in shares amounting to about 18 crore shares have opened up. So the lock-in ends today, and therefore they're eligible for trading. And the stock has seen a sudden spike starting 2 p.m. And now it's up close to about 4.5%. The high on Ola Electric was 157. But currently, the stock is at 113. So it's still off, considerably, 25% from its peak. But intraday, there has been a big move in that. But Petronet LNG is under pressure. There is a Jefferies note. Sonal joins in with the highlights. Sonal.
Thank you for that. Well, remember, Q1 was strong for Petronet LNG. We did see high power demand, and that is something that led to higher volumes as well. But now Jefferies in its report suggests that these volumes are off peaks, around 30% from the May peak levels that we saw when power demand was high as well. Now it's because gas demand from power has cooled off in the month of July. Spot LNG prices, they are more expensive. That would mean imports would go down, and that is negative for Petronet LNG. And compared to alternate fuels, it is weighing on gas demand in the industrial sector right now. The other thing is that earnings momentum is also turning out to be negative for Petronet LNG, and there are capital allocation concerns with respect to the petrochemical plant that has been ongoing for a while. And the second one is the recent East Coast Terminal project. This would be the medium-term drag for the stock as well. Now, valuations after this 90% surge that we've seen in the stock since November are also unfavorable, and that's why they maintain their underperformed rating with a target price of 240 rupees a share. The volume decline is something that Jefferies is worried about when it comes to Petronet.
There's one more from the oil and gas space, ONGC. And here as well, news is not so good. Citi has downgraded their rating and view on the stock. Sonal, tell us more.
Well, remember, ONGC was one stock which was seeing a lot of valuation comfort, and most of the brokerages were positive on the stock as well. But now Citi has downgraded the stock. They say that oil prices below $75 per barrel. That is something which investors should worry about when it comes to ONGC, because earnings of ONGC would be the most impacted because of that. So they have downgraded the stock to a neutral right now, and the net crude realizations for the stock have averaged to around $75 per barrel since the last 2 years. This is since the application of windfall taxes. But crude's recent breach of this threshold poses downside risk to earnings because they've been able to maintain it around those levels, but that would not be the case going forward according to Citi. That's why they've lowered EPS by 7% on lower crude price assumption of around $70 per barrel. Citi is not bullish on crude prices going forward, and they say since the stock has already outperformed 30 only 8% year to date. They do not see more valuation comfort as well. They have a target price of 330 with a neutral rating on the stock.
All right. Thanks very much, Sonal, for that. So that's essentially, some news coming in from the oil and gas space. Well, on the other hand, you've got oil marketing companies, right? HP, BP, IOC, where a drop in oil prices, crude oil prices, does provide a bit of a lift. Although there is a fair bit of talk now whether the government actually will go ahead and sort of pass on the benefit by lowering fuel prices at the pump, or will it actually, exercise their option to change excise duties on petrol and diesel? So we'll have to see what they do. At the end of the day, will the company get to make more money in terms of marketing margin, etc., or will it be passed on to the end consumer? Deepan, I know you're not a big fan, if I'm correct, if my memory serves me right, but any thoughts here?
Yeah, I'm not a big fan of oil or gas. Your memory does serve you right. I mean, we have to focus our energies on finding good quality stocks, great businesses, multi-bagger stocks, potential multi-bagger stocks. You don't want to get stuck in all these commodity plays, and whether it's ONGC or the oil marketing companies, there's always a lot of noise around them, so they do capture the headlines and they do get your attention from time to time. But look, you take 5, 10, 15, 20-year type of returns for these companies and they are negligible, maybe even negative, I'm not sure. So I just don't waste my time looking at these companies at all. There could be good trading opportunities. I agree with that. You may follow the charts. Some positive news flow may come. These stocks may rally. In fact, if you're a contrarian player, times like this are good entry points also for oil marketing companies and ONGC as well. But look, end of the day, they're not great wealth creators. And if you're looking at steady secular growth companies, these are best to be avoided. And there are a lot of uncertainties around these businesses. So that's the reason I don't look at them very closely.
I'm looking at the HP, Hindustan, you said long-term, Hindustan Petro was, in 1994, it was $40. It's at $400 today.
Well, that's after how many years?
Yeah, I mean, at the point, 30 years, right? So it's like
30 years.
I mean, I think you've had stocks go up 10 times in 5 years. I mean, anyway, but there are diehard fans, and you know that, right? I mean, many who kind of look at this space very closely. There are. Now, Deepan, so where are these, multi-bagger opportunities, or actually things which can compound, essentially? That's what you meant.
Yeah, that's right.
The market opportunity is good and there are good moat, etc. Do you own any of these jewelry names? We spoke with Senco, and that's what struck me. They're entering newer sort of adjacent areas to jewelry, fashion and lifestyle and things like that. I don't know if you own any of those or have a view on Senco.
No, Prashant, nothing on Senco, but with great deal of disclosure that we are, we have ownership of this particular stock. One company we could discuss, it's rarely discussed on CNBC, is Goldium. And you can see the price movement has been spectacular over the past month or so. It is one of India's largest lab-grown diamond exporter of jewelry. And completely backward integrated. They manufacture their own lab-grown diamonds as well. And they are now in the process of setting up a retail chain purely for lab-grown jewelry. Now, globally, lab-grown jewelry has really taken the entire industry by storm. By some estimates, 50% of the jewelry in US is lab-grown. In India, it's just a minuscule portion. And that's bound to change as more and more of the consumers look for lab-grown diamonds in their jewelry. So it's one company which has got good potential. I think valuations are reasonable. It's not a recommendation, but certainly one could look at the stock in positive light with a longer-term view. So within the jewelry space, I think there's one business which has a slightly distinct and different business model.
You own it, so that's a disclosure. By the way, it's doubled this year. Actually, it's not doubled this year. That's wrong. It is doubled this year, but that is only half the truth because it is doubled in August.
That's so. I think very good order book position also. That's what's driven the sentiment in the stock.
Yeah, 160 in July, and the high in August was 355 or so. But what a P multiple? Where is it trading at now? And What are margins, etc. like?
About 30 times or so trailing 12 months is my estimate. And this business can compound at 15-20% easily, top line, bottom line. Only risk factor is that the prices of diamonds keep on going down, the lab-grown diamonds. So there could be inventory challenges over there. But it's an asset-light business model, a proven track record, a lot of cash on the balance sheet, decent return ratios, online presence as well. So this is one company that, as I again mentioned, we are invested in it. And again, it's not a recommendation, but we were talking about jewelry stocks. And I just thought that it's worth mentioning that a company like this could be a rising star instead of the likes of Senco Gold or some of the other companies, which have already established a kind of a network and are now trading at rich multiples. They have also, have their set of challenges because of competitiveness in the Indian jewelry industry. Titan certainly is facing the challenges from these companies. So let's looking for something different in the entire space.
And they sell directly to consumers or wholesale? I mean,
the online channel sells to the consumer, but then large portion of the sales come from large jewelry chains in the US.
Okay, all right, fair enough.
Just last week got an order from some US customers amounting to 70 crore rupees. So that's pushed up the order book, but it's a small company, 3,700 crore in market capitalization after the stock has doubled. But by the way, in some good news for the traditional gold jewelry companies, Crystal has come out with a note where they're saying that gold jewelers' retail revenues are likely to go up by 22 to 25% this year, which is higher than their earlier assessment of 17 to 19%. And again, they're echoing what Senco said, this budget cut of import duty on gold has actually boosted demand significantly. So now they're saying that organized players, and they surveyed nearly 58 of them, and they're saying that the gold demand is going to be 22 to 25% higher than what they had earlier anticipated at the beginning of the year. But Mangalam is now joining in. In fact, the entire consumption basket is higher. You've got names like HUL, Tata Consumer, Britannia, ITC across the board. Big gains. Mangalam, what's happening?
Well, what's happening a lot when it comes to consumer stocks. Some specific news and then some general news as well. For HUL, the big news is that over the weekend they went ahead and told the exchanges that they've gone ahead and constituted a committee to evaluate the way forward for the ice cream business. Remember, the parent entity Unilever had announced a decision to spin off their ice cream business by end 2025 itself. And in light of that, Rohit Jawa has told CNBC-TV18 multiple times that they are evaluating all options for the ice cream business, and they will do that within the timelines announced by the parent entity itself. The ice cream business accounts for nearly 3 to 4% of the overall revenue of the company. Remember, in the first quarter, in July itself, the company has gone ahead and, approved the sale of their water purification business, Pureit, for about 600 crores as well. So that's about a 2 times sales sort of multiple that this business got. Britannia, on the other hand, is gaining on the back of getting all the approvals for increasing capacity and capex at their Ranjangaon plant. So that helps them further as well. And some other consumer stocks which are buzzing, in addition to what you already mentioned, the likes of Godrej Consumer, Dabur, ITC, Marico. The key triggers to track for them now as we are in September, just at the onset of the festive season, would be demand ahead of that. And secondly, it's also nearly the end of monsoon, just about 15-20 days remaining. So post-monsoon pickup in rural is something that everyone is pinning their hopes on. And the fact that over the last 5 days or so, crude has been fairly benign is working further for the raw material situation. So all factors actually coming together for the FMCG pack, and these stocks are a buzz.
Thank you very much for that. HUL, Dipan?
No. Again, a very stable company, very low growth rates, reasonably valued. A lot of the products which they are present in have reached maturity. Okay, they'll get a bump up because of higher rural sales, some up trading. But by and large, I think, this is not a stock which can deliver outperformed or outsized returns going forward. So it's best to avoid. Within the FMCG space, again, look for smaller companies. I like what came out from Bikaji Food, the recent listing. At correction, maybe 10-15% correction. Varun Beverages looks interesting. That also is a great rural play because they are expanding their distribution network in the rural area. As electrification has picked up over there, there is scope to put more refrigerators and therefore stock, Pepsi over there. It's been a great performer over the past several years or so. So I think you have to try and find niches within the FMCG play. The larger companies, the likes of Nestle, HUL, Godrej Consumer, I think Dabur, they are more or less, I think, stable performers. They can protect your capital, but I'm not sure that they are growth stocks anymore.
Okay, no, I got that. just a quick look at what else is happening right now in the market. So actually, I'm looking at, I've sorted the screen based on the big volume-led gainers. There's a lot of stuff, but I can't. So, for example, I'll give you a sense. PC Jeweler is the top volume-led gainer today, right? There is, of course, Goldium, which Deepan mentioned. Humongous volumes on Goldium as well. Okay. Premier Energies, of course, continues to move higher, 7.5% on that one. Jubilant Pharma is up about 9%. That's a very large gain. Moripun Laboratories is up about 5.5%. Ecos Mobility, which is again recent listing from last week, is up another 6% this afternoon. EPAC is up 6%. Tribhuvan Das is up about 16%. That is Tribhuvan Das Zaveri, one of the oldest players. Hikal is up 8%. La Opala 6.5%. You got so yeah. I mean, go down the list, you'll find more, and it's not a sort of small volume, low volume kind of a day. There's enough happening. This Premier Energy, Deepan, did you look at the company closely and did you participate?
Yeah, Prashant, very interesting, and we're so nice to see so many such interesting, good quality businesses getting listed in this bull market, and certainly will provide a lot of variety going forward. A great business to own, I think. Good long-term secular growth story. The capex cycle anyway is picking up, and we like a lot of stocks in the capital goods space, and something to do with renewables certainly catches our eye. Recent order win has been impressive. Overall order book position also is very good. Just that stock is slightly expensive. It's a new listing, so it's bound to have a lot of interest, a lot of high volume, high deal of speculative activity as well. But I think 3 to 6 months down the line, after a couple of quarters are reported by the company and it's available at a reasonable valuation, a PEG multiple of around 1.5 to 2 times or so, I think that would be a good entry point. But it's a company worth keeping on your radar. And there are so few players, who are doing the type of product and projects which this company does. And the way the entire renewable energy business is shaping up, and the fact that they are an established player certainly means that they'll trade at a premium.
All right. We'll leave it there, Deepan. Thank you very much for joining us. Appreciate it. We'll take a quick commercial break here. First on the program, we're going to come back. We'll have Amit Gupta, Senior Vice President and Fund Manager at ICICI Securities, PMS, speaking with us on the other side. Stay tuned.
Welcome back. The Nifty is now back above 24,900. Banks are leading the charge on the way up. The Nifty banking index is now up over 1%, outperforming. And even the PSU banks, which were under pressure, are now showing some signs and trying to get back into the green. So pull up a Bank of Baroda, pull up a State Bank of India. These are stocks which are now back in the green after trading with cuts of nearly 1.5%. And in the frontline pack, it continues to be ICICI Bank. So that's the top gainer in the banking pack in the large cap banking space with a gain of more than 2%. Kotak Mahindra Bank is looking smart. Axis Bank, HDFC Bank too have seen an intraday pullback. But one sector which continues to remain under pressure, not just today, but over the last couple of days, have been the PSU stocks. The Nifty CPSE index is down nearly 7.5% this month and 10.5% gone compared to its recent high. Hormus joins in with a quick analysis of how individual stocks have fared. Hormus.
There's been this silent sell-off within the PSU space that nobody has been talking about, because they were talking about the PSUs all the way through when they were moving, at record highs every single day. But the PSU index, the PSE index, made a record high of around 11,800 on the 1st of August, and since then the index has given up almost 8.5% in just about a month or so. And since there are a lot of these sectors within the PSU basket, the high-flying ones that start off with the railways, of course, the rail PSUs, almost look at these names: IRFC, RVNL, IRCON, RailTel. Almost all of them have corrected anywhere between 15% to 30% from their record high levels. So this is the kind of correction that you've seen. Of course, these stocks have moved up 3x, 4x over the last 1 year. So these, even after that, they have corrected almost 15 to 30% from their record highs. Even the defense names, be it HAL, BEL or Bharat Dynamics, have seen a correction of anywhere between 19 to 20% to even 30% for Bharat Dynamics from their record high levels. Now within the shipbuilders, shipbuilders were the ones that were very talked about in the month of July and also towards the month of August to a certain extent. They topped out in the month of July for the time being. Mazagon Dock, Cochin Shipyard, Garden Reach, all of them made record highs in that month of July, and since then have corrected anywhere between 25% to as much as 40% when it comes to Cochin Shipyard. Metal PSUs as well, SAIL, NMDC, have seen corrections of anywhere up to 30% from their peak levels. And even the power PSUs, be it REC, PFC, they are the ones leading the losses today, down almost 10 to 20% from their peaks. Now, excuse me. Now, these PSUs, brokerages too are erring on the side of caution. Citi downgraded ONGC recently. Goldman Sachs downgraded SBI on Friday, and Morgan Stanley too says that it is veering away from PSU banks towards the private players, and it has cut price targets for SBI, Bank of Baroda, PNB, Canara Bank and Bank of India. So overall, the silent PSU sell-off continues, but people looking to find some value at the lower levels.
Absolutely. Hormus, thank you for that. Amit Gupta is with us, Senior VP and Fund Manager at ICICI Securities, PMS. Amit, good to have you with us here. Good afternoon. You heard that summary from Hormus on PSUs. I just wanted your thoughts. I think you own BDL, right? Bharat Dynamics in your portfolio.
So we had a higher portion actually of the PSUs in our portfolio, and for the last 1.5 years. And we have made good money also there. I mean, when you buy a stock, you don't expect it to get in double actually so soon, but it has happened in the case of PSUs. And so we have trimmed down our positions now. If you look at, we had almost 35% weight. Now we have brought it down to 20% in our portfolio. And we believe that going forward, some new sectors are emerging now. And I think that is where we need to focus. Those which were not performing in the last 2 years or 3 years, I think that is where the market is shifting. This is a tactical shift, but we need to definitely participate into that tactical shift also. So PSU as a space, I'm not saying that the whole steam is going to go away, but they may definitely enter into some time correction. It's a primary trend, but it will pick up after some time only. I think the way state elections also are going on, and we have seen some kind of freebies also being given over there, that will also have its toll actually on the PSU stocks. And I think the rainfall and all, I mean, it was good. So some consumer names, if they have to participate, money may not go out. Money may move from one sector, this particular theme, to another theme, which is going to happen now.
Amit, afternoon. So from here on, would you look to further bring down your PSU exposure from the current 20% or keep it at these levels?
So far, we are keeping it at these levels. We have already booked some profits, and I think we are just looking for the fresh allocation now in this particular volatility going forward.
Allocation to PSUs and? Which other sectors you said in terms of a sectoral rotation?
Yeah, so basically, if you look at the sectors like technology, right, rural-related segments, consumer segments, textiles, sugar-related, segments, I think that is where we need to shift our money now, because I think they were not participating before. Some of the pharma names can still participate because still there is a drug shortage in US. And I think all of these segments, they are not so-called high beta segments, but definitely the money allocation is going on, I think, now in these sectors. So that is where we are focusing.
And in technology, is it large cap, mid cap? Is it the ER&D players?
Yeah, sure. So I think among the large cap also, if a company is focusing more into ER&D, I think they are definitely going to be a beneficiary. It is not only a game of only IT services now. You have to be into products and services. You have to be there in ER&D to garner, I think, more attraction. So that is what, SCL Tech is also doing. SCL Tech over the period has started outperforming Infosys and TCS on a relative, performance basis. And it is happening just because they have moved more into ER&D segments also. If you see in the automobile, previously we used to have only 10% of softwares used, but now it has gone to 26%. And going forward, it will be 55, 58% also of the softwares used in automobiles. So I think that is how the markets are moving. And that is what the companies also have to be well equipped. Yes, on artificial intelligence, all of them are working. In fact, their clients themselves are asking them to come out with an AI tool. So for example, if a company is catering to any pharma, the segment, so the clients, they are asking for AI tool for the clinical trials, etc. So I think they have to work on AI. It's a challenge, we understand, but they have already started. And you need to look at the history. Whenever any new technology comes, initially there is some volatility, but slowly, because ultimately our companies are selling that technology or going to sell the technology at a cheaper rate, they get benefit. And they understand the technology also very fast. So I think this is the benefit which goes to Indian IT companies eventually. And when the interest rate cut cycle is going to start, I think the valuation derating also should stop somewhere.
Got that. By the way, the market's up 70 points. So, it was up 20 when we started in the program. It's added on quite a bit more. Very, very quickly. And of course, banks are the ones, the large banks are the ones which are doing the heavy lifting. From being up 0.8, you got about 1.2% kind of gains in the Nifty Bank. I mean, the leaders here, of course, are the ICICI banks of the world. ICICI Bank is up a full 2.5%. Kotak is up about 1.5%. IndusInd is up 1.33%. There is Axis, which is up about 1.25%. Out of the financials, Amit, what do you own?
So we have, some of the PSU stocks also. For example, SBI is very much part of our portfolio. And so we own this because we don't expect too much of downside also. So if the downsides are coming in some of the PSUs, I don't think that kind of significant move is going to come on the downside in the PSU banks. Because if you see what has happened, the loan to deposit ratio in the PSU banks is much lower than the private banks right now. So SBI has somewhere around 66, 67%, and RBI has laid out a range around 80% that they can bring it down. They can bring it up to 80%, but those who have higher LDR, they have to bring it down. And that's why if you look at the results recently in HDFC Bank also, they were selling some of the loan book to bring it down. And that's a positive actually with the PSU banks. I think going forward, the only thing is when you are bringing your 66% to 80%, you need more capital, and that's why you increase the FD rates also. And that is the reason the PSU banks have higher FD rates recently than the private banks in some of the cases. And I think that was coming as some of the pressure in the near term. But I think the interest rate cut going forward, NIMs getting shrunk, those things are factored in the price now and will get factored with some more time correction, and that's all.
JSPL is one of your top calls, top recommendations. What is it that you like about JSPL, which makes it attractive over the longer term?
So in fact, we have recently added some positions when the stock had corrected, because it is Jindal Steel and Power, actually. It is JSPL. Because if you look at from the efficiency perspective, we have seen one of the best efficiency coming back into this particular stock. The metal prices are already lower now in anticipation of some of the slowdown in the global economy. But I tell you one thing, we are in the financial markets. I still remember in 2021, the bond yield spread in US had gone negative, and it was factoring that the slowness is going to come in the US economy going forward. So once the financial market, the debt market had factored that particular thing, and then equity markets for 2 years in US were reeling down, and then they recovered. I don't think we should again talk about too much of slowness in the US economy now. So rates cuts are coming, and if the economies remain resilient, what we are seeing currently, I think some of the metal revival can also be seen. And the kind of weakness in China and their impact on metal prices, I think to some extent it is already getting factored now at these prices. So that's why we feel that going forward, the companies which are getting the mines, so JSPL is getting the mines. So the captive part also is coming up, which will give them benefit of the raw material cost also. And that's why their efficiency, which has already recovered much better, their debt to equity had declined from almost 4 times to now 0.1 point something. And so from that front, I think we have a much higher target for the stock going forward. It can take some time here, but eventually the downside does not seem to be too much now.
All right, Amit, we'll leave it there. Thank you very much for joining us. It's a pleasure. Thank you for taking out the time here on CNBC TV18. I think we're going to take another quick commercial break with news that the Nifty is up 70 points. We're at about 24,922. Well, let's focus on, Religare. Now, this is in a way, a special situation stock because, there is this corporate battle which is brewing between the Burmans of the Dabur family and the Religare management and the board. Now, Religare, the Burmans of Dabur already own, about 25% in the company, in Religare already, and they have an open offer which is out there for Religare. The existing management of Religare, led by Rashmi Saluja, who's the executive chairperson, has been, of course, in a way fighting this. There've been sort of complaints made and there have been sort of, all sorts of things which have sort of been exchanged. Now this has turned a bit of a surprising angle. The Enforcement Directorate has filed a complaint against Rashmi Saluja, Nitin Agarwal and Nishant Singhal. My colleague Santya is with us now to tell us what exactly has led to this. Santya, take it away.
So, Prashant, this acquisition battle has taken another interesting turn, and now Enforcement Directorate has filed an FIR with the Mumbai police where the ED has accused Rashmi Saluja, Nitin Agarwal and Nishant Singhal of criminal conspiracy and cheating. These are the sections. Now, what is ED's case? ED says that Rashmi Saluja and the other two accused gave money and asked a complainant to file an FIR against the Burman brothers in order to block the whole takeover. Now, it was in November last year that a man called Vaibhav Gavli, who claimed to be a shareholder of Religare, approached Mumbai police and filed an FIR of financial irregularities against Burman brothers. And he said that the act of Burman brothers have caused huge financial losses to the shareholders. So, ED's also started investigating the money laundering allegations which surfaced in its investigation, and this is what ED's FIR says, that in its investigation, ED found that the complainant was not genuine. Now, the case which ED has filed, ED officer in his statement has said that when ED recorded the statement of Vaibhav Gavli, he said that he was asked to file this FIR. He filed the FIR on instructions of Rashmi Saluja, Nitin Agarwal and Nishant Singhal. He was paid 2 lakh rupees. He was asked to buy shares worth rupees 1,20,000 Religare shares, and remaining 80,000 he was asked to keep it with himself for filing the FIR. That's why he filed the FIR, and he in his statement to ED has said that this was done by Rashmi Saluja and others in order to block the takeover, because once again I'm quoting from the FIR which has been filed by ED. According to this complainant, Rashmi Saluja was diverting funds from Religare and its subsidiaries in the form of ESOPs, and she wanted to continue enjoying these benefits, and she was was afraid that after the takeover, that might not be possible. Hence, the whole thing was done. So ED's cases of criminal conspiracy and cheating against Rashmi Saluja and others. And in fact, last month, ED froze assets worth 120 crore rupees of CHIL, which according to ED was held in Rashmi Saluja, Agarwal and Singhal's accounts in the forms of ESOP. Now, ED is expected to take this case further because ED is already investigating a money laundering case pertaining to Religare. Prashant.
Okay, Sandhya, thank you very much for that. So, you know, you don't get across this kind of news item very often, but this is what is happening at this point in time. So, ED filing a complaint against Rashmi Saluja and two others for instigating what they say is essentially a false complaint. So that is the latest. Stocks actually is moving up about 3.5% now at about 286, 287 at this point in time. We'll take a quick commercial break here. We'll come back. We'll get you a check on what's happening in dealing rooms with D Street Chatter. We'll, of course, get you some buy today, sell tomorrow trades with the technical experts as well. Stay tuned. Okay, welcome back. There's 30 minutes to go, 20 minutes to go for the market closing. Time for our segment, D Street Chatter. Nimish is here with what's happening in dealing rooms and what he's picking up. Nimish, what's on your list today?
Hi, Prashant, not a bad outcome given the weak global case. So the Nifty sitting in the green, the Bank Nifty is in the green. And even from a flow perspective, it's not like very aggressive selling. Yes, there is selling basket, but that's largely on the PSU names, especially the power PSUs where I understand there is aggressive selling from the larger FIs. So that's one pocket which is seeing some bit of selling pressure today. Even the broader markets are relatively under pressure. The mid-cap index is down 0.5% and the advanced decline is close to 1:2 on the sell side. But even within the mid-caps, there are some notable gainers as well, and those are buzzing on large volume. So it's a kind of a mixed day, so to speak, from a flow perspective and from a market perspective as well. I guess technically 24,800 is a very crucial support on the downside. If that gets taken out, then you could see a very sharp correction. That's the technical feedback. But broadly, we've seen some support around those levels even in today's market. So it looks like that's a level to watch. But from a market point of view, it's not a bad outcome given the weak global cues.
Nimesh, hi. What about individual stocks?
Well, so a lot of individual names are buzzing in the broader markets as well. The first name is Electro-Steel Casting. There was a large block in morning trade and the stock is recovered after that. 1.1 crore shares got changed hands. I understand a leading FI investor was a seller in today's block and some domestic mutual funds were buyers. So the disclosure will be quite interesting. And I was looking at the data, the FIs in total owns close to 20% in Electro-Steel Casting. So the disclosures will be interesting there. The second name is Vodafone Idea. Under pressure for second day running, we saw a big cut on Friday after the Goldman note. The volumes are on the higher side. Interestingly, I understand in the last couple of days, some large H1 investors have aggressively bought. And also there is a buzz of some a small creeping done by the promoter entities as well. So that part would be quite interesting if there is a disclosure from the managements in the days to come on creeping acquisitions. So that is something to track in Vodafone Idea. The third name is Paytm. Big move on that name as well. Large volumes even in today's market. I've been highlighting for the last few days that there could be a large block very soon. But now I understand the entire block could be bought by a single strategic investor. So again, the block deal in Paytm is something interesting to track going forward. And the last couple of stocks where I understand there could be large blocks very soon. So DCX Systems and Aster DM. These are the two names in the mid cap where there is an indication that there could be blocks coming very soon.
Thank you very much for that. Vodafone Idea's recent high was over 19 rupees that it hit, I think, in June, towards the end of June. And now the stock is at 13 rupees. So it slipped close to about 35% from its recent high of 19 rupees plus. Mitesh is now back with us for a few BTST calls. Mitesh?
Actually, I have one BTSC and one STBT. STBT on granules. I think, after some kind of rally and a strong up move, there are first signs of profit booking over here. Take a stop at about levels of 672 and look for a target of around 650, 652 for tomorrow. And Chola Finance is something, which has been a recommendation earlier. Now is a BTSC kind of a call. Keep a stop below 1525. Look for a target of 1555, 60 for tomorrow.
Okay, all right. Mitesh, thank you very much for that. So individual trades and focus. Let's bring in Yash now. Let's talk about the life insurance business data for the month of August and how they look. Yash is here with details and how companies have done. Yash, over to you.
Well, Prashant, it's been strong growth for the industry in the month of August, but this time around the growth has largely been led by the largest life insurance company, that is LIC. Private growth in the month of August seems to have slowed down to about mid-single digits or thereabouts. To start with individual companies, for HDFC Life, it's a strong growth which has come on it's a slow growth rather, which has come on a strong base. August premium grew by just about 4%, 5 months FY25 premium growing at 12%, total APE growing at 8%, retail APE growing at 10% so far in FY25. ICICI Prudential, it's a moderate growth over weak base. August premium growing at 12%. For the first 5 months of FY25, the growth in the premium stands at 17%. The total APE growth stands at 21%. And August retail APE stands at 29%. Max Life Insurance, very, very strong growth. We saw that in the previous month as well. And August, again, it's a very strong growth over a strong base which the company had to grow on. August premium up 17%. First 5 months, the premium growth stands at 16%. August total AP growth of 17%. August retail AP growth of 20%. SBI Life Insurance, it's a weak growth for the company, but over a strong base. So August premium is down 13%. For the first 5 months, premium is down 5%. August total AP contraction of about 2%. Retail AP, though, has managed to grow by about 4% in the month of August. Finally, LIC, as I said, driving large part of the industry growth in the month of August. So August premium growing at 22%. For the first 5 months, the growth stands at 28%. The total AP has grown by about 13% in the month of August. The retail AP has seen a very, very small growth of just about 100 basis points over a base of 3% growth in August 2023.
All right, Yash, thank you very much for that. So that is the insurance data for the month of August as it comes through. Siddharth Khemka is with us at Motilal Oswal Financial Services. Sid, good to have you with us here on closing. Thank you for your time. You saw the numbers, life insurance. Stocks have done well. I mean, it's not a very high beta sector or anything, but slow and steady. And this year has been so far pretty good.
Yeah, Prashant, I think if you look at the overall insurance space after the COVID, they were under pressure because of both slowdown in the overall business growth plus the high claim ratios impacting the margins. I think last few quarters we have seen that improvement coming back into the insurance space, both for the life as well as the general insurance space. And on back of the growth, some of the stocks have started doing well. Another factor is that some of these insurance companies were trading at very high valuation, which after the consolidation post-pandemic became attractive. We recently upgraded HDFC Life from neutral to buy. SBI Life has been something that we have been liking a lot from a long time, and that continues to be our preferred pick. LIC post-listing after the correction again has been gaining market share and has been reporting strong growth both in terms of new business as well as margins. On back of that, we are expecting LIC return ratios to improve from about so if you look at ROEs are increasing to about double digit, and that is also helping with the low valuation that the stock is trading at. So within the life space, we like HDFC Life, SBI Life, and LIC. And within the general insurance space, we like ICICI Lombard. It has been a market leader with a very steady growth. The growth is only going to pick up. So FY24, Lombard had an earnings growth of just 11%. Next 2 years, we are forecasting about 25 to 30% earnings growth. Valuations, although a bit on the higher side, but we believe that with growth improving, the valuation catch-up would continue to happen.
Siddharth, hi. Gold jewelers are in focus today. We had a chat with Senco, and they also said they're positively surprised by the kind of uptick that we've seen in August and September since the beginning of the festive season. And as the budget, the cut in import duty plays out, so demand has been very, very robust. Which one would be your top pick? Earlier today, Dipan was telling us that Goldium International is a stock that he's looking at. So at Motilal Oswal, which one are you pushing?
Yeah, Rima, hi. So I think, yes, the bonanza, you can say the budget bonanza for gold jewelers with the government cutting the rates have been very positive. We saw Q1 numbers where while Titan reported a steady quarter, sharp outperformance was seen from the likes of Kalyan, Senco, which reported, so Kalyan reported almost 30% growth, which was much higher than the 14-15% growth reported by Titan. While Titan continues to be a steady compounder where we believe that 15 to 20% earnings growth would happen for the next 3-4 years. In the near term, what we believe is, what we like is both Kalyan Jewellers as well as Senco, both of which are in the mid-cap space. We believe the outperformance will continue in terms of earnings growth. So for Kalyan, we are forecasting almost 45% earnings growth for FY25 and about 35% earnings growth in FY26. And valuation-wise, it definitely trades at a discount to the market leader, which is Titan, which has consistently traded at premium valuation. Even if you look at for a Senco Gold, we have a buy rating and a target price of about 1350. The earnings growth would be in excess of 30% for the next 2 years, and PE-wise, it is trading at about 30 times FY26 compared to Titan, which is almost like say 64-70 times on FY26.
Siddharth, do stay on. We need to slip into a very short break, but as we do that, let's listen in to Vetri Subramaniam, Chief Investment Officer of UTI Asset Management Company, on how he feels about the market and what is the best approach.
As a capital market participant, I'm happy that capital formation is well and truly underway, but I don't think this is a one-dimensional, perspective that we should be keeping. There is a massive supply of flow which is coming through from promoters, from new issuances, as well as from, strategic holders, including Ps and VCs. So, every day you're flooded with a new set of either block offers happening in the marketplace, or QIPs, or OFS, or IPOs. So it's a very hectic market, and that's the reality of it. So if you look at our multi-asset allocation fund, our net equity exposure can come down to a minimum of 20. It can go up to a maximum of 80%. Currently, we are less than at the halfway mark at about 45%. So in a way, it is an underweight equity stance in the context of asset allocation that we make in that scheme. In terms of sectors which are attractive, honestly, there's only one sector top-down that we find reasonably attractive at this point of time. It's a combination of above average fundamentals with below average valuations, and that, roughly speaking, is the banking and financial services sector. So that's the one sector where I have absolute comfort.
Welcome back. It's now approaching a 200-point recovery from the day's low as the Nifty now stands pat at 24,950, a near 100-point gain on the Nifty with the sensex up close to about 400 points. In conversation with Siddharth Khemka. Siddharth, any other stocks that you would like to recommend to our viewers?
Yeah, so I think in this volatile environment, while today we have seen a good recovery, if some of the defensive sectors like the consumer space, FMCG has done well with monsoon being above normal so far, and a lot of management commentaries talking about how the rural sector growth has now come back and has been better than the urban growth. So what we like within the overall consumption space is Godrej Consumer. We have have a buy rating and a target price of 1700. What we like is that GCPL has adopted a growth-oriented strategy, which includes acquisitions, cross-selling, entering new segments, and expanding its TAM, which is your addressable market for existing products. We are targeting a high single-digit volume growth in FY25 in India, and some of its global markets have also started recovering and reporting better numbers. So on its own, what we are seeing is one of the strongest earnings growth amongst its peers for Godrej Consumer, and we are expecting a PAT CAGR of 18% with margins expanding by 100 basis points over the next 2 years. So we recommend buy on Godrej Consumer Products Limited.
This Viatech Vabag, is this a stock that you look at? It's been zooming every single day. Last week, it won a very large desalination order worth 2,700 crore rupees from Saudi Water Authority. Since then, the stock has been zooming. But year to date, it's up 120%. In the last 1 year, it's gone up nearly 200%. Viatech Vabag.
So, Rima, we have not looked at Vabag not under coverage, but that entire theme of recycling and the environmental friendly sectors have been doing well. We looked at one company from that space, which is Gravita India, which is a key player in the growing recycling industry, especially with the growth in the EVs. We are seeing a lot of focus on recycling of lead, which is almost 90% of Gravita India's revenue. We believe that growth would continue for such sector space, and Gravita is also expanding its capacities, incurring a capex to double capacity over the next 3 years with a strong growth, earnings growth of 30%. We are positive on Gravita, which is a recycling of lead business.
Now, I think there's 2 minutes to go for close. Sid, thank you for joining us, and thanks for staying with us, but we'll come back to you for more a little later. I just want to start wrapping up things. We'll end up 100 points. So 25,950 is where we will close at. The low today is 24,753. So that's a 200-point recovery, clean 200-point recovery from the day's lowest level. It's just quite incredible. I mean, whichever way you look at it, I think just a remarkable sort of recovery from the day's low. It's 1/3% day on day, but from the day's low, it is very, very nice. I mean, 1% rally from the day on day on the Nifty Bank. The low on the Nifty Bank was 50,370, and we leave off at 51,095. So about 500-600 point recovery from the day's low on the Nifty Bank as well. I mean, I think PSUs perhaps were one area which were a little under pressure, but you know, enough working on the upside as well. Private financials, one, FMCG, and the direct consumer basket, another, which participated on the upside. Rima.
Europe is, by the way, picking up. So the CAC and the DAX, both of them are up nearly 0.8, 0.9% as they begin trade for this week. So they've shrugged off the red across the Asia-Pacific region, but Europe has been higher. FMCG and banks lead from the front. The Nifty FMCG index up 2%. Banks outperform a gain of nearly 1%. Individual stocks, HUL, Shriram Finance. On Shriram Finance, there was a UBS target price increase. ICICI Bank, ITC, Britannia, Kotak Mahindra Bank. So the top gainers all belong to banks and the consumer sector. On the way down, ONGC under pressure. There was a Citi note, Tech Mahindra, BPCL, Tata Steel, Hindalco, NTPC, amongst the other notable stocks ending in the red. We will wrap up on closing bell on that note, but don't go anywhere, because on the other side, the short commercial break is our special markets forward. We'll prep you